I'm often asked, what is actually system trading? How does that differ from the trading most people normally do, and what are the advantages, disadvantages, and so on and so forth? Well, first of all, let's talk about discretionary trading. Discretionary trading happens when a trader decides to buy or sell a stock option, a stock, a futures contract, whatever, for any of a number of reasons. Now, what I've got here on the screen are several indicators. These are the TTM trend indicators, paint bars. These are the TTM scalper indicator. You've got two moving averages here. You've also got the TTM squeeze. Many people use this combination of indicators to decide when to buy, when to sell, when to get out, and so on. That's one instance of a discretionary trade. Another might be, you hear the news on IBM is going to be great, so you want to buy the stock. You hear the news on Google isn't going to be so good, so you sell the stock. That's fundamental trading. In either instance, the trader themselves makes his or her own decision on whether to buy or sell, when to get in, when to get out, based on either on fundamental activities, technical indicators such as you see on the screen, and usually a combination of both. That's fine and dandy. Everybody has their own trading style if they've never placed a trade before. But system trading is a little bit of a different animal. Now let's take these indicators off. So now what we have is just a plain price chart. What system trading does is take the data you see in front of you here. Now what you see is a bare price chart. This happens to be the YM contract on an 89-tick chart. This is a pure price data that happens during the trading day. Now what happens is a computerized program, a program that I've written in easy language and TradeStation, collects this data, processes it, and creates buy and sell points based on probability of historical price action, based on pattern recognition on a couple indicators and a few other things that we take a look at. It also decides when to get out based on targets, based on reversals, based on an equity out function, based on different price targets, and day loss and so forth. So let's add the system to the chart, then you'll see what this looks like. We've just added the universal system to the chart. What you see here is this is a sell point, this is a buy point, this is a sell point. If you now look at the chart, you'll see the buy and sell points actually generated by the system. Anytime you see a blue arrow pointing up, that's a buy signal. A red arrow like this one's pointing down is a sell signal. Anytime you see a white arrow like this one here, and there's one in here that's a little difficult to see, that's an exit. So what happened here, the computer generated a buy signal. We got stopped out here for a predetermined loss. Almost immediately we sold short into a downtrend. We come down here and took one of our contracts off at a profit, at a target. Then a few bars later we reversed back long to a long position. We took one contract off at a target. And then we come back up here when we reached our equity goal for the day. The price was exited. The trade was exited, and then we get out of the system, get out of the market. Now everything you see here is generated by a computerized program. No one had to push a button to do this other than turn the system on. Now I often like to say that automated trading is not necessarily unattended. I think it's a good idea. In fact, I almost insist that anyone trading an automated system stay in front of the computer to make sure everything happens properly. And basically we're just wanting to make sure the computer is up, the internet connection is solid, and that the trades that are generated are actually taken in your actual account. This isn't a big deal, it's just a good idea to be in front of the computer to watch this. System can be applied to any market, any time frame. In this instance we're looking at a 1-minute chart of the July corn. Here's your sell signal, here's a buy signal, another sell, stopped out for a loss. Here's a reversal long, caught a target here, reverse short here, reverse back long, and close out at the end of the day. Nice thing about system trading is that you can look and see what it would have done historically, as well as you can see what your trades would have been had you taken them automatically in your account. To do this, we can open a strategy performance report, and that shows us for the 10 days between June 15th and June 25th in 2008. This contract would have made a net profit of $3,487 on, I can open this up here, on 28 trades at 67% per profitable. Drawdown was around $1,200. You can look at what the periodic return would have been each day. You can also graph these returns. Nice thing about this is if you don't like what it's doing, you can go in and change some of the system inputs. All you have to do is right click on the chart, go to Format Strategies, open up the inputs, and you can change the trading pattern. You can change anything you want by going through these inputs. And there's a manual for several videos that accompany the system to tell you how to set up these charts in a different manner if that's what you want to do. So basically, discretionary trading is done when a trader decides to buy or sell depending on his or her interpretation of technical indicators and/or fundamentals. On the other hand, system trading is done automatically by a computer, processing the raw data from the market and comparing what the computer is seeing in real time to what it's noticed historically, and placing trades automatically. All the trading is done, all the calculations are done, all the trades are placed and received, cleared and filled and put in your account automatically. All you have to do is stay out of the way and make sure the system is up, make sure the internet connection is live, and so on. That's basically what system trading is, and that also describes the differences between system trading and discretionary trading.